What's going on, everyone? Gilman with the Wellthy Stocks, back with our daily Apple update video where we take a look at how Apple stock traded today, key support and resistance levels that we are looking at moving into the future, and based on that, what we think Apple stock could do. So real quick, if you enjoy videos like this, don't forget to hit that like button down below, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. So let me hit record. We will get right into it. As you guys already know, probably we are down $3.87 on the day, which is an almost 3% red day. Today was not a great day for the markets overall, especially if you're invested in tech stocks. The NASDAQ was down about 2.5%. As you can see here, the Dow Jones somehow was up 29 points, but still relatively flat on the day. And then the S&P was down 0.77% as well. So compared to all that, right, Apple, compared to the NASDAQ, was still trailing it, but it wasn't as bad as it could have been, considering the overall weakness that took place in the market today. So Apple is looking not too great, and we'll discuss a little bit why. But yeah, so let's take a look now at a little piece of news that came out, although it was not reflected in the stock price. Still want to cover it because that's what we do here. We like to cover, all things with the stocks we're looking at. So that is that Apple actually claims the global headphone market lead ahead of Samsung for the first time since 2016. They ship more smartphones than any other company in the fourth quarter, including Samsung. And this is the first time, again, since 2016 that they were able to do that against Samsung. Another thing to keep in mind is that they weren't even on sale for the entire quarter. So that's what they were talking about. They shipped nearly 80 million units in the quarter, which surpasses other smartphone makers, including Samsung. And, a lot of this, as we know, is powered by the fact that it was the first 5G iPhone. And the other factor in that, you guys, is the fact that it came out in Q4, right? So typically it'll come out in September, and then we'll get some shipments in the October through December quarter with the holiday season. But this time we got all of that happening in the last quarter. So that's just something to keep in mind. Revenue did grow 17%. We covered that in the earnings call a little bit ago, and the decline came from Huawei, which is the Chinese smartphone maker. So really quickly wanted to cover that. Obviously, we did not see that reflected in the stock price, but still, if you're a long-term bull on Apple, that's great news for us. So let's take a look at how we were today. You guys remember last week and in the video yesterday, we closed at the 130s, and that's kind of the key point that I was talking about, is we need to stay above 130. Use the 55 EMA as a level of support, but as we saw, it was clear we went from kind of the high 129s in the after hours on Friday to right down to the mid 127s, a pretty decent gap down, as you could see here. And so right then and there, things were not looking too promising, in the pre-market. What happened in the first minute of market open was we went up to 129.72, and at that point, I'm watching this 130.24 level that we have, or even 130, to see if we break that. We did not. We came right back down. As you could see, for a little bit we were hovering around this 128.54 level. We were hitting up against it, broke above it, came below, bounced, and then broke below. Now, you guys know when we have these levels, right, it kind of defines for us what we're looking at. And look, anyone can make a chart graph and say, hey, I think Apple's going to go here, Apple to the moon. But the reality of it is you have to look at levels, and that's exactly why we look at levels in my channel, rather than me telling you, I think Apple's going to go to 140, right? For Apple to go to 140 for me, it needs to break 130, then it needs to break the next, then it needs to break the next level, right? Apple's not just going to go from here to 140. So when we break this 128.50s, the next level we're looking for is this 126.65, and man, we got there pretty darn quickly. We got a little bit of a bounce, right? So you see here, we got a pretty perfect bounce, did not break below it, came above, but then we went right below it, right? So significance of the level, though, is that that's kind of where we stopped for a little bit, but then decided we were going to go right back down. We made low of day 125.60s, pushed up, broke into the level, right? And then when we went down, again, same thing, looking at this point, support, pushed up, came right back down, good support point again, and then things, I mean, I thought we were going to have a little bit of a recovery, pushed up, VWAP rejection, pushed up, and then made it to almost 128, got rejected, and then we sold off into the close. Now, this was pretty much the broader market as well, not just Apple, right? Like I said, the NASDAQ was down 2.46%, and the Qs, which are a bit more tech heavy, I mean, you can see follows a pretty similar pattern, right? So sell off, a little bit of a recovery with a even nastier sell off. Now, Apple's sell off was not as bad if we compare it to the Qs, which is the QQQ, for those of you guys that follow it. Qs made a really made a low at the end of the day, whereas Apple kind of didn't. I mean, Apple did not go as far down as it had before. So that's what I like about Apple. What I don't like, not necessarily about Apple, you guys, but about the whole market right now, is the sell-off in the second half of the day, right? So typically what we'll see is a sell-off at the beginning of the day, a little bit of a recovery, flat, or maybe going up and then fading into the close, right? So if we started here, we would go up and we would fade into the close. What I don't like here is the strength, or rather the weakness with which we close, right? The selling strength rather. So I don't like that. With the overall markets though, that's not Apple specific. I don't like that we're this far below VWAP. I don't like that we broke below this 126 level. Now let's go to our daily chart and we'll see what we see. So what we have seen, again, if you haven't seen my videos, is this trend line that we were monitoring pretty much going back to November, and that's a line that we had, set, because we kept bouncing off of this line every time we came back, bounce, and then here last week we were, looking for that bounce. Unfortunately, we did not get the bounce, and we broke below it. Now here on Friday's candle, we made a higher high, higher low, and so that was something that we talked about. Hey, is this the beginning of a little bit of a turnaround? And in my video, I talked about a couple things yesterday. I said, hey, we really need to break into 130s, and we need to get above the 55 EMA to establish that as a level of support, because if we don't, we have run room down to the 89 EMA, which, as you guys see 2 days ago on Thursday, 2 trading days ago that is, we did go down. We did not visit the 89 EMA. Today, however, we did visit the 89 EMA, and not only that, we closed below the 89 EMA. So what we got here, and I want to share this with you guys, is if you just Google dead cat bounce, it'll show you a little bit. It's not a perfect dead cat bounce, but what they're talking about is, when you're going down, you get a little bit of a bounce and then you start heading back down again. So this could be what that is. Although typically, it lasts a little bit longer than, just a day, right? So you see here downtrend, push up a little bit and then continue the downtrend. So not necessarily saying that that's what's happening, but it's just something that it reminded me of. So this is kind of, again, I want to stretch the importance of looking at key levels and how it works. You can jump in an Apple here, right, and think, oh, it's already gone down from high 138s to 120, like high 120s. Now it must start going back up. Not necessarily true as we see in today's instance. I myself got into an Apple call trade, so I'm not bashing on anyone. I thought it looked good late last week, got in, really close to stopping out on that one. I'm going to give it a couple days, but if not, I'm going to be stopping out of that trade. But what I really want to share with you guys right now, let me get rid of the drawings here for a second, and then we can do the support and resistance levels, is I want to scroll back, and the EMA lines, the very bottom one we see here is the 89 EMA, right? So if I scroll back, I'm going back to like 2019. We rarely ever broke below the 89 EMA. We broke below it here, which is when there was a market-wide sell-off. This is mid 2019. We broke below it here for a couple days in August 2019. But since the start of the pandemic, right, that's the first time we broke below it. Every time that we've kind of come down to the 89 EMA, including here in late September, here in November, here again almost, right, didn't quite come down to it. In late November, we've bounced, right? So here we didn't touch it, here we didn't touch it, here in the middle we did touch it, right? But what you'll see if I zoom into here is we never closed below it. We never closed below the 89 EMA. Now fast forward to today, we closed below the 89 EMA. The 89 EMA, as you'll see right here, is $126.27. We are at 126. So we're 27 cents below that. Not to panic, but that 89 EMA to me is kind of a really, really last resort level of support. So the next couple of days, it's super, super crucial for us to overtake that 89 EMA and start using that as a level of support, because beyond this, it's really hard to, figure out where, from a technical level, right, we can get the price action levels, the horizontal lines that we have. But from an EMA perspective, this is when it gets kind of scary to look at. And if I do the same thing with the moving averages, you see that we are way below the 50-day moving average, which again has happened a couple times, but it's important for the stock to kind of come above that. The 200-day moving average is all the way down at 111. Now, I don't personally think we go down there, but I'm waiting to see where we bounce for now. So let's talk about levels of support, levels of resistance, and we'll see what we have coming up in store for us. So since we are right here, you guys, we are below this 126.67. Let's cover the downside. If we are unable to capture the 89 EMA tomorrow, we've got a level of support in the 123.60s and then 121.48. Those are our next two levels of support. And then on the upside, it's really important again for us to recapture that 89 EMA in the 126.27. We are pushing up a little in the after hours. We're at 126.10, so about 17 cents away. If we can get a little bit of a push up, or maybe a little bit of a gap up above the 89 EMA in the 126s, that's kind of our level right here. Low 126s, break into this 126 level, push towards the 128.50s, and then the next level is 130. So again, first level we have to break into is the 126.20s in the 89 EMA and the 126.60s level that we have. Next level I'm looking at is 128.50s, and then the other level that I'm looking at is the $130. I'm gonna be 100% honest with you guys. When I was looking at the chart today, I definitely thought we were going to get a bounce from the 89 EMA, but now that we're not, I'm holding on to my call position, but super close to stopping out, as I'd mentioned previously. If we don't get a bounce above the 89 EMA and we don't start pushing towards the 120 or 130 level, I'm probably going to be stopping out of that position. But I'm holding on to my shares long term because I do think we see a recovery here, and I'm not in any rush to do anything with those shares. They've been sitting there for a while, so I'm okay with letting them sit there and selling covered calls in the meantime to take advantage of that. The other thing I want to warn you guys is you can always sit on the sidelines and do nothing. That's totally cool. It's better than trying to jump too early into a trade, right? So if you jump in thinking, hey, this has to reverse now, it's not necessarily true. What you have to understand is, or at least me personally, I like looking for a little bit of confirmation before I start to go deeper. So not a great start to the trading week, at least for me, because I'm heavy in some tech names that were hit pretty badly, but that's okay. I've done well in January, so giving some of that back in February. Most of it's unrealized, so I'm hoping for a bounce, and I've got enough time on all my options placed, and I have shares, so no really time expiration on those. Hope you guys are doing okay trading wise. Let me know down in the comment section if today was a bad day for you. It was for me for sure, so I definitely feel your pain there. But that's okay. It's all a part of the game, right? You have some red days, you have some green days. You haven't earned the green days if you don't go through some red days. So that's all I had for you guys today. Hope you guys enjoyed. If you did, don't forget to drop that like, subscribe to my channel if you are new, and comment down below what your thoughts on Apple are, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.